Right, everybody. So this video, I'm just going to run through the Bollinger Bands for you. And as with my nature is to keep things simple. And I'm going to talk about the three things that I use the Bollinger Bands for. So there are a whole stack of different strategies and scenarios around Bollinger Band. But to be quite honest, I'm just a simple guy. So I look for the most common patterns, and those are the common patterns that I trade. So, Bollinger Bands, the three things that I look for. The first one is the double bottoms or double tops. Okay, now I'm going to square out this area for you here. Okay, and let's just zoom in a bit. So, this is the Bollinger double bottom. Why do I say that? So, price is closed outside the Bollinger Band here. Okay, it then comes up, it then moves to the downside. It does penetrate the bottom Bollinger Band, but it comes back and closes inside the Bollinger Band. So essentially what's happening is from the distance outside Bollinger Band to inside Bollinger Band, there is a deviation between price and the Bollinger Band. So that is a double bottom setup. Okay, and you trade this like any other double bottom. So your target is going to be as follows. Let's just get a... So from there to the top. So the distance from here to here, and you add that to the top there, and if we just draw a line on there, you'll see where the profit taking happened. See those two red bars there was profit taking on this double bottom. Okay, so that's the first thing. The second part of this is double tops. Okay, now this here is a double top, but we don't have a really nice pullback to measure, to take a target measure, but it is still a double top. You can see how there we are close to the Bollinger Band, here we're far away. That's indicating a turn is happening. And this you can see is actually, you can even call it a triple top if you want to, but the important thing to understand is that here we're outside the Bollinger Band, here we're inside the Bollinger Band, and here we're further inside the Bollinger Band. So there is deviation there, there is a turn about to happen. There's no signal, but it's just giving you a warning. I just want to find us a double top here. And okay, so there is one there. Just box it up for you. So here you can see we are close to the Bollinger Band, and here we are far from the Bollinger Band. So this here is also a double top. So you go from there to there, and you move that to the downside, and that would have been your target. Okay, we overshot it slightly because we would have aimed for a level, but that's kind of where you'd be. So let's just look for a couple more so you can just see. Okay, so here is another double bottom. Okay, and in essence, let's just get rid of all these noise. You could refer to this as a triple bottom. So, and we'll measure the target out now, and you'll see why I say that. So firstly, we close outside the Bollinger Band, close inside the Bollinger Band, but then we close far away from the Bollinger Band. So we're deviating from the Bollinger Band here. Okay, and this setup, especially when you've got 3, and on the rare occasion 4, that is always an indication that you are about to change the direction that you've been traveling in. Okay, now let's say, well, let's play this as a triple bottom. So there you have, that came out, went up. That's the apex, there, down, there, right? And let's copy that segment, and we put it up there, and we draw a line, and you can see how close we came to it, but just didn't quite get there. Okay, but for all intents and purposes, that target was hit. So for these kind of targets, what you're looking for is you'll be looking for the next level. And we're on the 4-hour chart, so that the levels that you would have been aiming for would have been, just delete that. So the first level you would have been aiming for would have been the bottom of this green bar here, this one here, okay? And the second level you would have been aiming for would have been the top of this red bar, and then the third level would have been there, the top of that pin bar. So somewhere in there would have been profit taking. And you can see it kind of always works out to be the middle one, but I'll explain that in a further video. That is your triple bottom. Now if we just delete that segment and delete that segment, and we play it safe and we say this is just a double bottom to there, and we do that, and I now put a line on here, you can see how we kind of tried to get there, and then eventually got through. And the same scenario here. The bottom of this tail here would have been the first target. Okay, so that would have been the first target, and you can see we've just touched it here. But anyway, levels is not for what we're talking in this video. So let's get rid of that. Okay, so just to recap, the first thing I'm looking for is double tops and double bottoms. And here's another double top. You see outside the Bollinger Band, inside the Bollinger Band, we break that level and we travel the distance of the double top. Okay, and we're not looking for deviations from it. That's the other pattern that I'm looking for. Okay, that is the first thing that we're looking for. The second thing that we look for is a squeeze. Now, a squeeze is very difficult to determine which direction you're going to break in. Okay, there's a good one there. So what are we talking about at a squeeze? It's basically when the Bollinger Bands come together very close like this. And that is an indication that something's about to happen and we're about to move in a direction. Okay, it's difficult to ascertain which direction we're going to go to. So you need to use a number of other clues as to try and figure out which way you're going. But when you see this, the warning is there. So you need to be ready for the move, and you need to try and figure out which way that move is going to be. And what you'll see is you will see the band starting to open up. So the bottom band will start pointing down. The top one will either stay horizontal or in some cases really point up, like over here. You can see how it starts pointing up, and this one's slightly pointing down. So whichever direction we're going in will be the direction that the band is pointing down or up the steepest. See there, that's pointing down, that's pointing up. Okay. Now, targets, you'll never work out targets from a squeeze. So typically a squeeze is a range break or it's a breakout about to happen. So your targets need to be defined based on the levels. But the important thing is when you do see this kind of stuff, it's always a good point to actually drill down into it and see what is happening, what major levels are there, has it rejected a major level, and so on. So in this scenario here, you can see, as per always, I've got my 200 moving average here. Okay, this green line is the 20 moving average, which is part of the Bollinger Bands. So, and we're going to talk about that now. But for now, I just want to highlight that there's a level here, which is the 4-hour 200 EMA, and there was a big rejection bar fit there. So for all intents and purposes, this is moving down. So a break below this is a move down. And we're in a squeeze, so the high probability trade here is to the downside. Okay. Before we move on to the third thing, I just want to see if we have any more squeezes. So this is also a squeeze of sorts. You can see we're moving up, but the bands are getting narrower and narrower and narrower until eventually they start opening up. And in this scenario here, this is why you can't use the Bollinger as your your sole indicator. I know there are people that do it, but for me, it's just it doesn't work. Okay, so you can see here we're in a squeeze and then we open up, but then we get a double top and we start moving to the downside. So it would have been a short move up, play the double top, and then all of a sudden we accelerate to the downside. So for me, the squeeze really indicates what's about to happen, but sometimes, you get a short move to the upside, then you get a violent move to the downside. So price is always going from one side to the other side of the Bollinger Band, pretty much. Okay, so there are the first couple of things. So it's double bottoms, double tops, okay? And then we talk about the deviation from the band. So where price is outside the band and how it slowly starts moving in is always an indication. And I'm often looking for 3 pushes down. So there's 1, 2, 3, or 3 pushes up, okay? That's not a really good example. Here's a pretty good example. 1, 2, 3, 4 going sideways. Let me see if we can get something here. So here you only get 2, 1, 2, but you can see the deviation. Okay, and as soon as you start bringing your levels into this, you'll realize that where the price is about to turn. Okay, then obviously the second part was the squeeze. So the squeeze always indicates that a breakout's about to happen. So it's very important to pay attention to the squeeze. So those are the first 2 things I look for. The last part of the Bollinger Band that I pay special attention to is the relation of price to the 20 moving average, this green dotted line. Okay, and essentially it's quite simple. We are above the 20, we are moving up. Okay, we are below the 20, we are moving down. And in this case it was a very haphazard move down, but still the trend was down. Above, we're moving up. Below, we're moving down. And you'll see how it starts to behave as a level, because profit taking happens at this level. So you see the sellers came in there, they came in there, they came in there, and then the buyers just gave up. Now the buyers are waiting for a level. They found something down here. They started buying, but we haven't broken the 20, it's still moving down, until eventually the buyers found the level where they could get some traction. Okay, so those are the 3 things that I focus on Bollinger Bands. So it's the double bottom or double tops with the deviation from the band. So when you see this kind of setup here, you know that the move is coming to an end. Okay, and often it is 1, 2 pushes down, and a 3 push down is just an extra confirmation of what's happening with price. And as with any, you can see he has 1 push down, he has another push down, he has another push down, and then we break up. So that's kind of how I use Bollinger Bands. And I just want to get down to the 5 minutes here. I want to show you what happens in the real time. So you can see, being a Friday, this is a typical pattern for Friday, how the sellers step in, they take profit on this nice run up here, and the run from the previous day, this big run here. So they take profit and they don't hold over the weekend. And there's some public holidays coming up in Germany as well, so it's all written in the charts here. But what I'm getting at is the squeeze is here, which is basically indicating that something will happen. So Monday morning, we'll see what happens to price, whether we're going to move to the downside to come and test these lows, or are we going to break to the upside and continue the bigger move. So this is already your warning that something's going to happen on Monday morning. Okay. And I think the other thing to point out is with the squeeze, you can see when you're moving down, see how wide apart the Bollinger Bands are. Or when you're moving up, you see how wide apart they are. But what always happens is they start coming together. They start coming closer together as price consolidates, ready for the next breakout. That's the picture that the squeeze paints for you. Okay, so guys, that's the three. And if you just focus on those three, you'll see how the Bollinger Bands will assist you in making quick decisions on trades. So it's a double bottoms. I mean, there's another double bottom. Okay, it's a double tops. It's the deviation. Okay, you can see here, even here, how price, oops, wrong line, how price is deviating from the Bollinger Band. Price is heading this way, Bollinger Band's heading up. That's indicating that there's something about to happen. And then obviously your squeeze, and pay attention to your 20 moving average. Okay, 20 moving average is one of the, I mean, there's so many people that trade it, which is the reason why you see so much action off it. And it is a great indication of the smaller trend and what's happening to price currently. Okay, guys, that's my view on Bollinger Bands. Hope it helps you. If you like, please give us a thumbs up. If you've got any questions, ask them, and don't forget to subscribe. Anyway, hope it helped. Catch you later.